Okay, thanks everyone for attending today. I have a great presentation for you because I'm going to actually share with you the first entry rules to this method that's perfect strategy for trading volatile markets. It's usually reserved, these rules, and I'm going to also share with you a proprietary setting. These are usually reserved for the people who have spent good money in purchasing this strategy, but I'm actually going to share them with you today. So if you're nearly a skilled trader, if you've been trading for a while, you'll be able to actually start applying this as early as tomorrow if you'd like. So it's going to fit in perfectly with what we've been seeing with the markets. Let me share with you an example here. Here's an example in MSTR. Okay, this was just last month. Let's say you're looking at this particular stock and you say, well, I'm interested in buying this, but I'm really not seeing anything clearly here. I don't really have an idea. And then all of a sudden it takes off and you kind of miss it and you say to yourself, wow, okay, well, it is going up the way I thought, but I didn't buy the calls or maybe I didn't buy the stock. And you say to yourself, well, I went to that chat room and that guy says that it's actually overbought. So maybe I should wait to buy and wait for it to come down a little bit because it's overbought. Maybe it'll come down to these levels halfway and I'll purchase it at a lower level. So you decide not to do anything. And lo and behold, it continues to go higher and higher, right? Does this look familiar to anyone? This happens a lot to our prospective students. They say, Steve, I keep missing these really big moves and I don't know when to get in. Well, with the entry rules that I will be teaching you today, you would have known on this bar right here that you should have been entering, actually not thinking that this was overbought, that this was actually a high probability entry point, and that in the next few weeks that followed, you could have potentially captured upwards of 90 points. So this is what we're going to be teaching you today. The perfect strategy for trading these volatile markets that you can apply to any market and any time frame. It makes absolutely no difference what market you trade. It makes no difference what time frame, and any type of marketable unit. In other words, you can buy puts, you can buy calls, you can use a spread strategy, you can actually purchase the stock or the contract. It actually makes no difference at all. That's entirely up to you. And everything you're seeing today is one click away on the platform that I developed with Pro Trader Strategies. We call this the PTS Primo Charting Platform. This is an educational platform that actually teaches you how to trade. So welcome, my name is Stephen Primo. I am the president and founder of Specialist Trading. If you're new to Specialist Trading or haven't heard of us before, I've actually been trading now for nearly 5 decades. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years, I was a specialist. That's where you get the name Specialist Trading. Now, a specialist isn't someone who's more special than anyone else. It just basically means in the old days, before we had electronic trading, you actually had to call your stockbroker to buy a stock like IBM, and the stockbroker would call the floor broker, the floor trader. He would walk up to the trader who made a market in IBM, who specialized in making a market and bought or sold 100 shares of IBM to that particular broker. Well, that's what I did. In fact, IBM was one of the stocks I made markets in, such as Waste Management as well and US Air. I made markets during the crash of 87 and the bull market that followed. I left the floor in the mid-90s to manage money and to also trade my own account. And about 15 years ago, I formulated Specialist Trading, which all I do is devote everything I've learned and accumulated in my nearly 5 decades of trading to teaching students around the world. And I'm happy to say I have students in over 115 countries and in every state in the United States. So hopefully I can educate you today and elevate your trading and give you the results you've been looking for. Now, before we begin, as always, we are required to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results by applying this strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, another way to get more education on a daily basis is simply to follow us on X or Twitter, formerly named Twitter. There's our handle there, abbreviation for Specialist Trading. Every day I post between 5 or 7 different snapshots of signals or methods or I should say techniques that have generated these signals in any market or a time frame. I also post little bits of financial wisdom. So there's lots of great free education on a daily basis. Please feel free to follow us on X. Okay, so let's begin today's educational presentation. And the strategy that I'm going to be sharing with you today is what we call Strategy 3A. So let's go over some of the highlights of this particular method. It's a continuation strategy. Well, if you're not familiar with what that means, this strategy, this type of strategy, looks for a trend to already be established. In other words, we're not looking to buy at the bottom of something oversold or sell at the top of something overbought. We're looking for an already established trend, and then we're just simply going to jump on board. Okay? That's what a continuation strategy is. Now, it does this by applying a unique Bollinger Band setting. And as I said earlier, this setting is usually reserved for the students who purchase Strategy 3A, but today I'm going to share with you what this setting is. Now, it's designed to trade these quick, powerful trends, and you'll see that in the upcoming examples I'm about to share with you. Now, when we first formulated Strategy 3A, it was really just for trading E-mini futures, intraday E-mini futures, because years ago, when we first formulated the strategy, that's really where the volatility was. I don't know if you remember, but when the futures first came out, there was a lot of movement on a daily basis in the futures, a flash crash and a lot of different movement like that, where stocks and other markets didn't move as well. But now, with the advent of a lot more people trading, well, you get that type of volatility in all the markets. So, as I said, we originally applied this just for trading the E-mini futures, but now you can apply it to virtually any market, any time frame, and in any direction. Now, with all of our methods, we ask our students to learn the strategy first and to paper trade. You're going to learn the entry rules to this today, and you can start jumping in as early as tomorrow morning. But please paper trade first, because if you jump in too quickly, I can almost guarantee that you're going to have losing trades. And it's not because it's not working properly. It's because you are not applying it correctly. And there are certain rules that you must follow through on. The requirements must be met. And if you jump in too quickly, you won't really go through the process correctly, and you'll get some faulty signals. And therefore, I want you to really paper trade this first so that you fully understand the process. Now, our edge with Strategy 3A and with all of the methods we teach at Specialist Trading is consistency. I know a lot of you think that consistency means that's over a number of winning trades. Well, that's not really what consistency means. Consistency actually is an awareness that you will have losses from time to time, and that's perfectly admissible. But a consistent method is one that's able to recoup those losses, often on the very next signal. So Strategy 3A is extremely consistent as well. All right, so let's give you a brief refresher course on Bollinger Bands, because we are basing this off of our unique Bollinger Band setting. Now, if you're not familiar with Bollinger Bands, I assume most people have traded with or are currently trading with Bollinger Bands. But for those of you who never have, let's give you a brief refresher course. Now, there are three bands to this really interesting indicator. Firstly, the middle band is just a moving average. That's all it is. It's a 20-period simple moving average. And then you have a band on top of it, which is called the upper band, and a band below it, which is called the lower band. Now, the deviation is, without getting too technical, is just basically the distance it is from that middle moving average, okay? So the standard benchmark setting for the upper band is +2, and the lower band benchmark is usually set to the same, but on the negative side, -2. So when you plot the Bollinger Band, the standard settings, they look something like this. Now, this red line you see here, this red band, is just the 20-period simple moving average. And the band on top is the upper band, and this is the lower band. And so this is the way a normal Bollinger Band application would look like. Now we're going to change things a little bit, because this is going to help us with our entries of Strategy 3A. Now, here's the proprietary setting. I assume this presentation, as with all the presentations today, are being recorded. So don't worry if you don't copy this down or get it perfectly remembered, because you'll be able to go back and watch the recording and view it many times over. Okay, here are the proprietary Strategy 3A settings. We're going to leave the middle band, which is just the moving average, the exact same. We're not going to touch it. Okay, so the moving average is going to be set the same at 20. All we are doing is changing the upper and the lower band deviations. The upper band, instead of a reading of 2, is going down to a fraction, to +0.382. And the lower band, which was usually set at -2, is going to -0.382. So that's all we're doing. We're changing the upper and the lower band. So if we look back once again to see what the standard Bollinger Band would look like, let's look what the proprietary settings look like. Okay, do you see how they have a much smoother, kind of a river type approach? This is what's going to aid us in the application of our entries. Okay, now if you aren't really familiar with changing the settings on whatever platform you're using, you should be able to just go into the edit box and change the deviation to 0.382. If not, contact your tech support. They should be able to do it for you, okay? All right, so let's look at the entry rules. Now, we're not going to go over the the selling rules because they're basically the same. You just turn them upside down, and I'm going to share with you a number of examples, and you'll be able to figure it out. But let's just start with strategy 3A, buy or entry rules. Okay, step one. Obviously, we want to plot the proprietary Bollinger Band setting on your chart. And the reason why we say this is because we know everyone trades a different market, a different time frame. Some people just trade, stocks on a daily time frame. Other people trade 5-minute, E-minute futures. Other people trade weekly bars of currency pairs or even a 4-hour chart of crypto. It makes no difference, but you have to plot the proprietary Bollinger Band first. So let's take a look at this older chart of Tesla. And I know it's an older chart, but we're only using this for educational purposes only. That's one. Okay, so we see that the stock has been going up. We say to ourselves, wow, okay, well, this is going up pretty well, but maybe it's overbought. So most likely you don't want to buy it. You want to sell it or maybe even go short. But what's the first thing we do? Well, we want to plot the proprietary Bollinger Band setting to give us an idea of not what some guy on TV is saying or what some guy in a chat room is saying or even what some guy in a webinar is saying. We want to see what the market is telling us because after all, that's where we're getting our signals from, right? The chart in front of us. We're not getting our signals from some guy on TV. We're getting them from the chart in front of us. So therefore, that should be the only thing you pay attention to. So on our platform, once again, we made it simple. Click on Strategy 3A in the green Strategy tab with all of our methods and all of our techniques. And in the drop-down menu, you'll see Indicator. Once you click that on, you'll automatically see the proprietary Bollinger Band setting appear. So there's nothing you have to edit if you use our platform. It's already pre-formatted to make it simple, all right? Okay, so now we have it plotted. Here is the proprietary Bollinger Band setting. This leads us now to step 2. We want to identify 5 consecutive price bars. That means price bars right in a row that close either on or above that highest Bollinger Band, the Bollinger Band that's on the top. Okay, 5 consecutive price bars close either on or above. So let's take a look. Okay, well, we have these below. We have this one, it closed above, and then the rest of them closed above. So we have a total of 5. Now, a lot of students, this is where a lot of students, once again, make mistakes because they're not going through the process correctly and they jump in too soon. They would say, but Steve, this one is touching the Bollinger Band, so should this not count? Remember, all we're looking for is the close. It's okay if it touches the Bollinger Bands or even opens below the Bollinger Band like this one did. All we are interested in is where the close is. And if the close is above the way this one is, well, then it counts as 1. Second close above, third close above, fourth, and fifth. Which brings us now to step 3. We are going to enter to buy when price trades 1 tick above bar number 5. Now, a lot of you, when I've given this presentation in the past, have said, well, what's a tick? A tick is just a unit of measurement. So let's say the top of bar number 5 is, let's say, 50. Well, then 1 tick above would be 50.01, 1 cent above. Okay. If you're trading E-mini futures, it's a character unit of 25 cents or a quarter of a point. Okay. If you're trading currency pairs, it's a pip. So you must know what this unit of measurement is. So now that we go back and look at the chart, we see, okay, 1 tick above bar number 5. Here's bar number 5. All right. So that's where we're going to buy. So remember, we cannot buy unless it trades there. So let's say the remaining days, it just goes lower and lower and lower and then goes and touches the Bollinger Bands and close below. Well, then the trade's negated because it didn't really get to our point of entry. This is once again where students make mistakes. They'll say, well, Steve, it traded there, but it closed below, so I didn't buy it. Doesn't matter where it closes. All you're interested in is where it trades. It just has to trade there, intra-bar. So let's see what happened. Well, the next day it didn't trade there. So a lot of beginning students say, well, then that means the trade is off then, right? It doesn't figure anymore. It's not a valid trade. No, it's still on. If you want to, you can still be watching it because remember, it just needs to trade here before it comes down and closes in the realm of the Bollinger Band. And ultimately it did. So there's where you would have been entering. You could actually buy at the market if you're lucky enough to be in front of your computer all day, or you could place a limit there to buy, a stop buy, whatever you want to do. But now you're in the trade, and look what happened. In the next week or two, you could have potentially captured 115 points. See, this is how simple trading can be when you get rid of what my mentors called useless noise. I mean, when I used to first start trading on the floor some 5 decades ago, I was learning the exact same things that I venture to say most of you have learned, where you have to wait for the earnings. You can't make a decision until the earnings come out, right? Or have to wait for the jobless claims or some indicator, economic indicator about inflation, or you have to wait to see what some trading guru says after the market closes. Things like that. I used to do the same thing. And trust me, it didn't work. None of those things worked in order to make you a consistent trader 5 decades ago. So I really don't believe they're going to miraculously start working now. It wasn't until I just started focusing on the market, the chart in front of me, that my trading started to make sense and to become more consistent. So that's the thing that my mentors taught me, and this is what I try and instill in all my traders or my students around the world, is that to focus on just what the market's telling. Now, I know a lot of you may be saying, hey, Steve, this is great, but where would I exit? And where would I place my stop? What if it didn't work out? You said that, not all trades work out. That's true. I can't give you all of those rules because they're all in the course itself. It wouldn't be fair for me to give you all the rules for free and then all the people around the world who have purchased this method say, hey, what's going on? I just saw that that webinar and that guy gave away all the rules that I purchased it. So remember, you have the entry rules right now. If you've been trading for a while, you'll have an idea of where you want to get out, maybe twice your risk, and you'll have an idea of where you want to place your stop. But now you know how to apply this if you want to use it to trade and you have the entry rules. All right, so let's look at some more examples just so you can get some more experience under your belt to know exactly what a setup looks like. And we'll look at both buy and sell setups, and we'll also look at different markets and different time frames, okay? All right, let's look at CEG. All right, the stock was heading lower and it seems to be going higher, but once again, you say to yourself, I'm not really sure what this is going to do. Click on Strategy 3A on our platform. We make it simple. Click on Indicator, and automatically you'll see the proprietary Bollinger Band setting. There's nothing for you to format, so every time you want to check out a trade, you don't have to go into your Bollinger Band box and click on and change it to 0.382 and then do it every time you want to trade a different market. It's automatically there for you, one click away. Now, as we look at this stock, we see, okay, well, this was last month. It's kind of going above, below, but it's not really breaking out one way or another. We have a close below here, but then it closes back above. But then look what happens right here. Just a couple of weeks ago, we have 1, 2, 3, 4, 5 closes, consecutive closes. So what does this tell us? It's telling us it's setting up for a 3A buy signal, but we have to buy only if it trades above bar number 5. So we can't just buy it once we see that bar number 5 closes consecutively above the highest Bollinger Band. We have to wait for it to trade one tick above. All right, so let's watch and see what happened. Well, the next bar didn't. So are we out of the trade? Is it negated? Well, I mean, if you want it to be, sure, you can move on to something else. But this setup is still valid. You're just watching it, waiting for the next bar. And on the next bar, it did trade. In fact, it gapped up above. So that's your entry. You would have bought on the opening. And someone would have said, gosh, how can I buy up here? The thing's making a new high and I'm buying near the highs. Well, it was still a good idea because look what happened. In the next 3 or 4 days, it went up 48 points. See how this is a perfect strategy for volatile markets. It always is able to check and see if there's a little bit more volatility or room left in the move. All right, let's look at Reddit here. This is coming into March, just a couple of months ago. Now, obviously, it's been going down, okay? It's been going straight down, as a matter of fact, coming into March. But you say to yourself, well, you know what? I'm a student of candlesticks, and this looks like it could be some type of a reversal pattern, maybe a doji or a hanging man. And that guy in that chat room says it's bottomed out. It's got major support here. Maybe it's oversold. So I think I'm going to buy it. All right. See how my decision process was made entirely off of outside sources, either someone or something telling me what this stock is going to do. You see, our philosophy is not to listen to those outside sources the way I used to 5 decades ago, and they didn't work for me then, but to listen to the market. And we need tools that help us discern what the market is trying to tell us. So that tool in this strategy is the proprietary Bollinger Band setting. So we click that on our platform, click on indicator, and guess what? We were originally be above 1, 2, 3, 4, but now we are in the Bollinger Band setting. But we have 1, 2, 3, 4, 5 consecutive closes below. So even though this actually may be bottoming out, for all we know, it could open the next day and just keep going higher. It's still setting up for a strategy 3A sell signal. All right. So what we want to do is draw an imaginary line here, and that will tell us that if it trades there, we're going short. We're buying the puts. We're going short the stock, whatever we want to do, however we want to trade this. Maybe we're even long the stock. We can use this as an exit point, okay? If you don't like to go short. Either way, that's a sell or an exit level right there. So let's see what the stock did. Well, for the next 5 or 6 days, it absolutely did nothing. It went sideways. Now remember, as long as it doesn't close above this lowest Bollinger Band, it's still valid. And look what happened. 1, 2, 3, 4, 5. On the 6th day after the setup, you could have entered to go short or sold your position, and that would have been a wise thing to do because the stock fell 70 points. So what happened to the oversold? What happened to the support that some guy in a chat room said was there? Remember, the market tells you everything you need to know. The trouble is we're never taught to listen to the market. We're always taught to listen to some guy on TV or some guy in a chat room. Why not just learn to listen to the market? It's a lot simpler and a lot easier. Let's look at MSTR. This is the stock we looked at the beginning of the presentation. Okay, so how did we get that buy signal? Well, it's as easy as applying the Bollinger Bands. Now we look and see that originally we were below. We had one below, but then we closed back above. Then we had 1, 2 consecutive closes, but then back up above. One consecutive close here by itself, but then back up above. So there's no sell signals at all until we get to right here. 1, 2, 3, 4, 5 consecutive closes above, on or above the highest Bollinger Band. That's all we care about. Remember, it's okay if we intersect the Bollinger Bands. All that matters is where we close. And these are closing either on or above that high Bollinger Band. So this is setting up for a buy signal. Regardless of what anyone tells you, the market is more important than some economic indicator. How many times have you seen some economic news come out where it's terrible news for the economy, terrible news for the country, and then the stock market just rallies to make new highs, right? Or the opposite. How many times have you heard great news, maybe fantastic earnings, and the stock goes straight down? We want things that are cut and dry, that not that subjective, where they kind of tell us one thing and do the next. We want things that, well, if it trades above bar number 5, we buy. It's most likely it's going higher. And look what happened. We would have gone long the very next day. And coming into last week in May, we could have potentially captured 90 points. Okay? This is simple. Trading is simple. It's the trader who makes it more difficult than it actually has to be. All right, a lot of students say, well, yes, Steve, what happens when the trend changes? Don't you get left holding the bag? Well, remember, we teach you how to track the trade. If you like to exit with a fixed stop, if you like to use a trailing stop, if you have a fixed exit point, we teach you all these things to protect yourself. But yes, sometimes the trend does change, as we see in this chart here of Team. We were going straight up. In fact, we gapped up, most likely on some big news or some announcement. And then look what happened. How well was that announcement a month later? We were making new lows coming into last month or so. So how would strategy 3A have helped us? Well, once again, the first thing, step 1, is we apply the Bollinger Band. And then we just go through the process. We look for 5 consecutive closes above, 1, 2, 3, 4, 5. And there's our entry point right here. And you could have potentially captured 55 points in the following weeks. Now, when the trend did change, what did it do? Price started going inside the Bollinger Bands, and now they're below 1, 2, 3, 4, 5 closes below. So now you can go short. There's your exit or shorting place to enter, and you could have potentially captured 70 points. And I know a lot of people always tell me in webinars, they said, yeah, but that means I would have had to buy right here and exit at the top to make 55 points, and then sell right here and then cover at the low to make 70 points. So sure, on paper, I could have made 125 points, but I would have had to get out at the top and get out at the bottom. Okay. Remember, we say you could have potentially captured 125 points. Let's say you only took half that profit. Okay. So let's say instead of getting out at the top, you got out halfway. All right. So instead of making 55 points, you make 25 or 30 points. Okay. Instead of exiting right here at the bottom and you only exited right here at the half, well, instead of making 70, you made 35 points. So instead of 125, now you made, let's say 60. Okay. Still too much? Okay, let's say you made less than that. Let's say you made half of that, 30 points. Wouldn't you still be happy with making 30 points in roughly 1 month? So this is giving you a lot of advantages. In the course, we teach you different variables on how to exit and how to trail the stock with our proprietary stop placement. So there's lots of ways. Our whole philosophy is to teach you so that you make the decision. And traders like to play the blame game. They always like to be a victim, like, oh, how come I missed that? Why wasn't I able to? Well, with our education and what we teach you, you'll never be able to blame anyone again because you know exactly how to trade with what we teach you. All right, here's an example in Netflix, okay? Coming into this month, we see that Netflix is really going strongly higher, all right? Just making higher highs, higher lows. But once again, let's say you like to go to that chat room and that guy says, well, I think it's overbought. Well, is it overbought? Let's check what strategy 3A says. We apply the Bollinger Bands, and what do we have? 1, 2, 3, 4, 5 consecutive closes. So here's our entry point. And for all intents and purposes, yes, it could be overbought. Maybe the next day it opens here and then goes lower, then the next day goes lower and lower, and maybe they were right. But until that happens, we're going to be a buyer if it trades right there. So let's track it. Let's see what happened. Well, it didn't happen on the next bar, but the next one after that, we could have entered and gone long. We teach you where to place your exit. We teach you different ways to place your stop placement. And look what happened. You could have potentially captured 100 points in less than a couple of weeks. And what happened, once again, to the overbought? What happened to it going up too much? Now, a lot of traders say, well, Steve, this is easy to see in hindsight. All of your examples are in hindsight. I would like to know in advance when this is happening. Like, for example, this hourly chart of the Canadian dollar. It's easy to see that this was going straight up, but how would I have known in advance to buy this? Okay, well, the Bollinger Band setting makes it simple. Once you apply it, let's do the countdown. 1, 2, 3, 4. Nope. Close below. 1, 2, 3. Nope. Close back up above. But now what do we have here? 1, 2, 3, 4, 5. All right, so we're going to be a buyer, and we know this in advance if it trades there. Remember now, the trade is negated if it comes all the way down and closes within these Bollinger Bands. But it never did. It touched it, but still didn't close. So it was still a valid setup. And you could have made 100 pips in virtually 1 day. 100 pips is roughly $1,000 per unit, okay? Let's say you made half of that. Okay, $500 in 1 day. Would you be happy with $500 in 1 day? How about half of that? Would you be happy with $250 in 1 day? And that's, I beg your pardon. That's my signal to go on to the next slide. I'm sorry about that. I have my market bells and whistles on. So let's say, would you be happy with $250? Okay, it's all relative. But the point is, you're going to be able to decide where you want to exit, how much profit you want to take or not take. Let's look at this 30-minute chart of Tesla for all you intraday traders here. The same process applies. Nothing changes because we're going to an intraday chart. All right, this was just last week or so. We have 1, 2, 3, 4, 5 closes above. Here's our entry point because we gapped up on the opening of the 25th just a couple of weeks ago. So you would have entered right there. 22 points in just 3 hours, trading a 30-minute time frame. Let's look at a weekly chart of AMD. Nothing changes once again because we've changed the time frames. We're originally above, but we don't have enough consecutive closes above. So now we change course. 1, 2, 3, 4, 5 closes below. The next bar, nothing happened on this week, but then the next week we did. So once again, if you don't like to buy puts or go short a stock, you could use this as an exit point. Let's say you were long this in your long-term portfolio and use the weekly bar as your exit point. Well, you could have exited your long position here and saved yourself 50 points to the downside, and then gotten back in once AMD does a buy setup above the Bollinger Bands on a weekly time frame. There are a number of ways to use this method. All right, let's go through the process. Once again, MDB. This isn't giving us a lot of information here. Just looking at these last 2 weeks of this daily bar, we don't really know much. Is it going up? Is it going down? Is it going to bottom out? Maybe you're saying, well, Steve, that guy on TV says there's support here, so we should be a buyer. Okay, well, once again, if you take your trading advice from an outside source, you won't be able to have that consistency that you have if you take your trading advice from the chart in front of you. And what do I mean by the chart in front of you? Well, the first thing we do is click on Strategy 3A, click on Indicator, and the chart in front of us is telling us that we have 1, 2, 3, 4, 5 closes below. So it's not telling us to sell, but it's telling us that it is setting up for a sell signal, but only if it trades right here, 1 tick below bar number 5. Now, on the very next bar, it did. Now, this is where students have trouble. They say, well, Steve, I sold and it closed up. That's okay. We're not concerned with the close. We're only concerned with where your entry point is. In the course, we teach you where to place your stop. In the course, we teach you different exit points. But as of right now, you're in this trade short. And that was a wise choice because look what happened. 1, 2, 3, 4 days later, it gapped down. What happened to that support that some guy on TV was talking about? Had you used this to exit your long position, well, you would have saved yourself 120 points to the downside. Or if you were more aggressive and did go short, you could have potentially captured 120 points. So this was all based on what the market was telling me. I have no idea why this gapped down, but I don't care because I was already short. I don't really care what the news is. Remember, the market usually tells you in advance what it wants to do. But if you had waited for some news event or some announcement, well, you would have, found out at the very lows. And then let's say you bought or sold here. Well, nothing would have happened for the next 2 weeks. But if you had gone short earlier, you would have had a nice profit in about a week on the short side. If we do this process on a monthly time frame, what if you're just an investor? You say, well, Steve, I don't look at daily bars. I don't intraday trade. I don't trade currency pairs or futures. I just invest in the market. I look at monthly charts. All right, nothing has to change because we're looking at monthly bars. Here's a monthly chart of Costco. Each one of these bars is a month, okay? So this is going back to about a couple of years in 2023. So it's progressively going higher, but it looks like it's maybe hitting some resistance here. Maybe you say to yourself, well, I'm not sure if I should stay long or buy some more. Well, this is where Strategy 3A could help you. Once again, it's a simple process using our platform. Click it on. In the drop-down menu, click on Indicator. And what do we have here? 1, 2, 3, 4, 5. So if you were thinking about exiting this and saying, well, I've got a nice profit, or maybe I want to move some money into another stock, I would really tell you to hold off a bit because it's setting up for a buy signal. You have 5 consecutive closes above the highest Bollinger Band. So if we trade above this bar, bar 5, I would actually say this is a good point to buy more. So let's see what happened in the next month. Well, the next month, it actually traded there, intra-bar. So you could have purchased more, or at least you would have had the assurance to say, well, I'm going to stay in with my position, whatever I have. And coming into this year, we've all seen Costco. Costco was up 500 points, okay? It was a 500 stock back in 2023. It's a $1,000 stock in 2025. All right, let's recap what we shared with you today. Strategy 3A is a continuation strategy, meaning we're looking for a strategy already to be, or I should say a continuation trend already to be established, and then we just jump on board. All right, that can either be an uptrend or a downtrend. And the way we identify this is through applying the unique Bollinger Band setting. Now, remember that Bollinger Band setting is usually reserved for the students around the world who have purchased it. I just shared with you today what that is. Now, it's designed to trade these quick, powerful trends, which you just saw. Now, when we first developed Strategy 3A, as I said earlier, you'll see in a few minutes, it was just for E-mini trading. Why? Because that's where all the volume and that's where all the volatility was. there were much bigger movements in the E-mini than there were in stocks and in other markets. But as we've all seen in the past decade, stocks, currency pairs, crypto, they have tremendous volatility now. So this is perfect for 3A. You can apply it to any market, any time frame, and any direction. Now, please learn the strategy first. I shared with you a number of ways in which our students make mistakes. They say, well, Steve, it didn't trade there on the next bar, so I guess the trade's negated, right? No, not necessarily. I mean, if you don't want to trade it, you don't have to. It's not a system. But the trade is still valid. The setup is still valid. So please paper trade first so you fully understand this. Watch this video as often as possible so that you understand the process. Our edge at specialist trading, not only with strategy 3A, but with all of our methods, is consistency. I know you think consistency means that there's winner after winner after winner, but that's not really what the true definition of consistency is. Consistency simply means that you have an awareness of losses, but a consistent method is one that's able to recoup those losses, often on the very next setup. So strategy 3A is extremely consistent. So ask yourself, before you ask me any questions as we get to the end of my presentation here, do you think this strategy can help your trading throughout 2025? I think your answer is very, very renowned yes, because I'm sure many of you have been experimenting while I've been giving this presentation, looking at past markets you were trading or current ones, and you're saying, wow, I could have done really well with this. So here's what we're going to do. We have a great, in fact, not only a great, but a very special offer for all of you attending today and coming to my webinar. We're going to offer you strategy 3A. Now, I know it says E-mini strategy 3A there, but we haven't changed the graphic yet. It can be applied to any market and any time frame because this is our premier continuation method. It uses our unique Bollinger Band setting and our proprietary entry technique. Now, you get the complete strategy 3A course. You'll learn all the rules. This comes with different entries if you'd like to enter more aggressively, if you'd like to enter more conservatively, different exit points, and different stop placements. Remember, we want you to decide how you want to implement this. Strategy 3A is simply shining a spotlight on a high probability entry point, either to go further up or further down. How you decide to enter, how you decide to exit, and how you decide to place your stop is entirely up to you. If there's one thing I've learned in nearly 5 decades of trading, it's that the only traders that are still around trading are the ones that make their own trading decisions. So that's the unique niche that we have here at Specialist Trading. That's the goal that we have. We want to teach you how to trade so that you can make your own trading decisions. You can apply this to virtually any market, any time frame, and in any direction. Now, we also have an extra bonus here as well. Everything you saw here today was from a display using the PTS Primo charting platform. That's because it's so simple to apply. We realize that many of you are using other platforms and you have to click on and go to the edit box and change all of the Bollinger Band settings. And every time you want to see a setting, you can have to do this over and over again. And you can't scan for these settings because you don't have the ability to scan with all the rules. Well, guess what? All of that is featured and one click away on the PTS Primo charting platform. So here's what we're going to do. We're going to offer you a full 6 months free. If you sign up for the Strategy 3A course, we're also going to include 6 months absolutely free of the platform. So you get one-click access to Strategy 3A. You can scan for nightly setups. You can use it on different markets. We provide you with data for different markets. This is a great, great opportunity. But remember, that's just one of the things that we have on the platform. This is just the tip of the iceberg. We also offer entry levels and stop placements. With one click, you'll see them exactly on the platform. Auto-generated exit levels as well. A strength of trend tool that will uniquely tell you if the trend is running out of steam or if it still has some more gas left in the tank, along with personalized tech support. If there's ever an issue or something you can't figure out or how to apply on the platform, our tech support will be there to solve all the issues for you. But here's one of the best things. Our enhanced buy-sell line. This is a tool I developed with ProTrader Strategies that has a unique ability to instantly identify what the overall trend is in any market and in any time frame. This is a great color bar tool. Let me show you how it works here. All right, here's an older chart of EAT, okay? Now, once again, traders love to say, well, yeah, Steve, it's easy to see that this has been going straight up, but how would I have known this? Well, in advance, that's what I want to know, that the trend was going higher. Well, here's the way it works. Once again, on our green strategy tab, simply go to the far left where it says buy, sell, because this will tell you whether you should be a buyer or a seller. Click it on, and we have 4 different ways to view this. Let me share with you a couple of ways. Click on fluid, and the screen automatically changes colors, okay? This is the buy sell line, which is just simply a 50-period moving average. That's all it is. Now you can apply this to any charting platform you like as well, a 50-period moving average. But here you have the color background that instantly tells you if you're in the blue buy zone or the red sell zone. And the way this works is it's not a strategy, it's not a system. It simply says if you see consecutive closes in one of these zones, well, that's telling you what the overall trend is. And that's telling you that you should only be applying strategies or systems in that direction. So looking back at EAT, we see going back months, look at all the consecutive closes above here. Now, originally it was below in the red sell zone, but now we have consecutive closes above when the stock was roughly trading around 70 and it went all the way up to 185, okay? See how simple that is? Let's look at another example here. In LMT, Lockheed, okay? Now, originally, this market was going higher, but then all of a sudden it gapped down. Most people say, well, it's going to come back, and they hold on to their position and they say, wow, I just want to break even. And then it starts to go up and they say to themselves, okay, now we're back on course. It's going higher, but actually it's not. It's going even lower. How could this help us? Once again, go to the buy sell line. This time, let's look at another format. Let's click on the background feature. Now, what this does is it doesn't display the buy sell line. It just paints the back of the screen. So we know when the back of the screen is blue, you should have a buyer's bias. That means that you should only be buying if the back of the screen is blue. And once the back of the screen turns red, you should only have a seller's bias. So right here, we had consecutive closes in the red seller bias portion of the background. And look, in advance, we knew to exit this. You see how this simple tool can help you? You'll only find this on the PTS Primo charting platform. Let's look at one more example. Here's a 10-minute chart of the spiders. If you're an intraday trader on the ETF that represents the S&P 500, look what happened. This was going fairly well. The 10-minute chart was holding well. Let's say you're an intraday trader and you're holding on to your position, and then something happened overnight, and guess what? You lost a ton of money holding on to your long position. How could this proprietary tool help you? Once again, let's use the buy-sell line. And as long as price, even on this 10-minute time frame, was above in the blue buy zone, well, you're looking to buy. But once we had consecutive closes below right here, this was signaling it's time to exit your long position. And on top of that, it's time to start looking for some sell signals with whatever strategy you're trading. It doesn't matter. It doesn't have to be one of mine. It could be one of yours or someone else. But look at how this would have at least got you out of your long position. And if you were so inclined, you could have gone short and taken advantage of that large move down. Now, obviously, a gap down, once again, based off some news announcement or something that happened. Isn't it funny how we knew hours in advance that the market was telling us, not me, not some guy on TV, but the market was telling you it's time to exit because we are in the sell zone. Remember, just as my mentors taught me 5 decades ago, the market tells you just about everything you need to know. The only trouble is we've never been taught to listen to the market. We're always taught to listen to some economic report or some guy in a chat room. It's time to learn how to listen to the chart in front of you. So you'll only find the buy sell line feature 4 different ways to view that on our platform, and that is included in this Strategy 3A course. 6 months absolutely free. This is what we feel is the fastest way to become a consistent trader. All right, so let's break this down. Strategy 3A course and the 6-month platform usually would run you close to $1,300. There's that much information and jam-packed things available for you. But here's what we're going to do. We're going to really discount this all the way down to just $297. You're going to save close to $1,000. This is a very, very special discount price. For less than $300, you can get close to 5 decades of information and tools and techniques that you won't find anywhere else. They're only on the platform, and you'll only have one-click access to that, okay? This is just for 1 day only, though. So take advantage of this great, great offer. $300, I mean, I know some people that go out for dinner or a couple of friends that are going to be spending close to $500. Remember, you're getting close to 5 decades of tools, techniques, and things that I've accumulated that you won't find anywhere else, okay? Here's how to take advantage of this. Contact my sister site, which is Pro Trader Strategies. I would highly recommend giving them a call at area code 310-598-6900. 6677. They have trading consultants manning the phones. They would be more than happy to take your order over the phone or answer any question you may have about the platform or Strategy 3A or anything else involved. Now, that link you see at the very bottom there is the link that will take you to the info page and this offer if you'd like to sign up online. It's not a live link, but you'd have to most likely copy and paste that onto a browser, or perhaps I'm not sure if they're going to, if David or anyone's going to post that in the chat box. So I would probably suggest just give them a call. They're very flexible. They're there to work with you. There's no obligation to purchase anything. They're there to give you information. And if you'd like to purchase something, then by all means, give them a call. But remember, this is only for one day only. So if you're interested at all and you want to learn all the rules to Strategy 3A and that buy-sell line and using our platform, I would highly recommend giving them a call right now. Okay, well, that brings me to the end of the presentation. I'll leave this information up right here. If you have any questions, I guess now's the time. I don't know if you want to read me the questions or if I should go to the chat box or there are any. Let me just see if I'll open it up here. People are saying thanks. Okay. Let me go a little more. Are the markets liquid enough for each index you trade? Yeah, they're liquid for any market, But remember, the great thing about the proprietary Bollinger Band is that if any market you're trading, whether it's an intraday or weekly or whatever, if it's not liquid enough, well, you will not get the 5 consecutive closes, either above or below. So that's the beauty of this tool. Okay, it really is just telling you basically. If there's volatility increasing or if there's no volatility at all, you won't get those 5 consecutive closes above, okay? Any more questions here? Oh, I see David just posted the link on the chat box. So if any of you wanted to click on that link, you don't have to open up a browser and copy and paste it. It's just one click away on the chat box, okay? What a lot of people ask as well is they'll say, well, Steve, I really appreciate Strategy 3A, but I'm not much of a strategy person. I usually don't trade that way. I've been taught to listen to news or earnings or things of that nature. I'm intrigued with this, but it's, I would have a difficulty with this. That's okay. Here's one of the great things that also comes with this course. Each and every one of my students gets my personal and private email address. And if you have any questions, if you have any doubt or something is not making sense or you're just not understanding it, I'm just an email away. You can contact me anytime you like. Prior to the opening, during the weekends, after the close, during market hours, makes absolutely no difference. And the email does not go to an intern or to an assistant or a salesperson. They come directly to me. I'm the only person seeing the emails. So this is another extra perk that's included with the course. If you have a question, you feel like, well, I'm not really, haven't been trading that long. I'm not that experienced with doing that. Don't worry, because I'll be there with you every step of the way. Okay. So just to calm your nerves if anyone is thinking about they haven't been trading long enough or they're not used to trading strategies. Good questions. Any more questions if you still have me? Let me just see here. I don't see any more questions, David. I believe that's about it. We probably have some extra time for the next speaker, but I just hope everyone takes advantage of that great offer. Remember, if you want to take advantage of it, it's for a limited time, 24 hours only. So I would really give them a call if you're interested at 310-598-6677. They can answer any questions that you may have, and they're there to work with you. So give them a call, and I'd love to see you come on board as my student. Okay? With that, I'll hand it back to you.